has the game changed for venture capitalists after one of the most volatile weeks in market history? Maha Ibrahim has some ideas. She's a general partner with Canaan Partners, specializing in social gaming, cloud computing, and digital media. Welcome back to Bloomberg West.
Thank you, Emily.
So it has been a crazy week. Has that changed your job at all going forward?
We are long-term investors in venture capital. We have to be. So to the extent it's changed it has been the immediacy of IPOs that have been on file. But no, I mean, we are looking at investments the way we always have, and that's the way we should be looking at them. The difference has been probably valuation expectations, particularly at the late stage, may have come down and may have been infused with a bit more rationality than they have been over the last couple of months.
So how much are valuations going down, potentially?
It's only been a week, so it's hard to say. Assuming that the IPO market opens up more than it has over the last week, and assuming you see the big IPOs get out, like Groupon and Zynga, et cetera, I don't think you'll see much of a change. Maybe a downtick slightly, but there's so much exuberance in the consumer internet space that I have a hard time believing that it's going to have much of an impact unless the market declines substantially over the next couple weeks.
Exactly. You know, couldn't things change quickly? You know, we've seen every other day up, down.
Sure.
Way up, way down.
Very reminiscent of the fall of 2008. When the financial crisis was happening, and the hope is that this is a correction and a contraction that is more sudden than, again, the one we saw in the fall of 2008.
So are investors going to be more cautious, though? Paul Kudrowski was speaking earlier. I'm sure you know his normal kind of take on things. He says the money is drying up already. Is that not something that you would echo?
I think that's a Debbie Downer situation. So I have a hard time believing that money is going to dry up again, because there's so much, I think, underlying enthusiasm and underlying growth within these companies that it's really hard for me to believe it will dry up. I think what you'll see is a slight movement downward in valuation, assuming that things plateau from here in the public markets.
That said, if you were an investor in Groupon or Zynga, would you be a little nervous right now? Would you, encourage them to stay on track, or would you say wait it out?
Go hard, keep going. Absolutely.
Let's talk a little bit about Zynga, because you were a very, very early investor in the social gaming sector. You're an investor in Kabam, which is essentially a Zynga competitor. We've been seeing Zynga work through this IPO process. They came out with an amended filing yesterday showing a material weakness in their accounting. What's your take on that?
I think that Zynga is such a phenomenon that investors will flock to it, and they should flock to it, because Zynga has proved themselves to be the far and away leader in the social gaming space, and frankly has almost eclipsed Facebook in terms of enthusiasm and excitement for a public offering.
Are companies like Kabam watching Zynga and taking notes?
Absolutely. Again, it's public market receptivity towards the story. Kabam's story is different than Zynga because one is more hardcore game and the other is more casual. But the overall excitement around this space is undoubtedly large, particularly with the PopCap acquisition of EA. So, yes, we're absolutely taking notes.
Now, let's talk a little bit about Google Plus, which just announced it's including games on its platform from PopCap, from Zynga, from Rovio, the maker of Angry Birds. Obviously, Zynga right now is only available on Facebook. So how big is this development for the gaming industry?
It will be as big as Google Plus allows it to be. So assuming Google Plus grows and assuming consumers flock to it, maybe not to the extent that they did to Facebook, I think it is only a benefit to the game developers to have an alternative platform to develop off of, in addition to mobile, in addition to Facebook.
But if Facebook's taking a 30% cut of the sales of virtual goods that happen within this gameplay, Google's only taking 5%. Do you think game developers are going to be more attracted to Google's platform?
Absolutely. At the Game Developer Conference in the early spring, the buzz was already out around the Facebook credits issue, and it seemed to me that particularly the smaller developers, the ones that were less established, were saying, how do I move off Facebook quickly? How do I move into mobile? How do I move into other arenas where the tax isn't so high?
Do you expect Google to get more expensive, or do you think Facebook might reevaluate its pricing?
I think both will happen. I do think that Google doesn't necessarily need to make a ton of money off of their platform because they're obviously making it in many, many other ways. But I would be hard-pressed to believe that that 5% is going to stay intact for a long time. It really depends, though, on what and how consumers adopt the gaming platform.
But can Facebook keep charging nearly a third?
Facebook can do whatever they want to do, and assuming they continue to do things like they did today, which was to increase the viral component of the game announcements within Facebook, I think that they are doing what they can to appease the game developers without having to move that 30% down.
Well, it is something we're definitely going to keep watching. Very exciting development for the gamers and the developers out there. Maha Ibrahim of Canaan Partners, thanks so much for joining us here on Bloomberg West.